Starting off with First Solar, shares are getting a boost as the renewable energy sector is rallying today on news of Vice President Kamala Harris becoming the front runner for the Democratic nomination. Or is this just a burnt cat bounce? Courtney, what's the trade here?
Yeah, the movement today, which you pointed out, has to do with the idea that Harris may be on the Democratic ticket, which could see tax incentives for things like solar companies, which would absolutely be a benefit to First Solar. We do caution, don't trade on these political headlines. We don't know who's going to be on the ticket. We don't know who's going to be in office. We don't know what their policies are going to be. That being said, I do like this as a stock, and we are a buyer here, mainly because of some of the fundamental factors. So with this AI revolution, there's not enough energy to go around. It's going to be an all hands on deck in the energy field, including solar, and they're absolutely going to benefit. And they have a U.S. focus centric, which means it's a higher margin business. And also you are seeing some sort of incentives like tariffs on Chinese products coming in, which is going to benefit your U.S. companies. So I think for all those reasons, regardless of any political headlines today, I would be a buyer here.
Yeah, it's been a very, very tough space, but they're probably the best positioned, at least from a domestic point of view. Let's move on to Abercrombie and Fitch. That retail stock jumped 3% after J.P. Morgan upgraded it to overweight. It's pared its gains, though. It's slightly lower. They were citing strong demand for the brand after marketing improvements, and we just know it's been a denim cycle, Courtney. Is it too late to jump on the bandwagon?
I don't think so. I do like this company, despite the fact it's done really well. It's kind of quietly outperformed the stock markets. I don't think a lot of people realize, but it is a brand that is absolutely resonating with your younger generations, your millennials, your Gen Z. And even in the face of a tough consumer right now, they're facing inflation, they're pulling back on spending, but for the right thing, they are continuing to spend. And I think the fact that they are resonating so well in this tough space for retail, I think just puts a lot for them as we look forward, that I think you're going to continue to see further growth. And they have the financial flexibility to weather some of the economic uncertainty, right? I mean, they have $900 million in cash right now and only $222 million in liabilities. And I think that actually absolutely puts them in a good position to continue to see further growth as we go forward.
And finally, we have CrowdStrike. The cybersecurity stock is plunging another 12.5% as investors continue to digest Friday's massive IT outage. If you're trying to catch this falling knife on Friday, you're bleeding. Courtney, can you catch it here?
Yeah, I know that's a little cliche, but this is one of those scenarios where you don't want to try to catch a falling knife. This is considered one of like the best in class cybersecurity companies. But when you have news like you did on Friday and that kind of outage, the big question remains is what kind of financial liabilities are they going to be at risk for that really nobody knows? And if that does end up being larger than expected, it's absolutely going to continue to have some pressure on their stock. And this is a company that was expensive even before the downturn that we saw on Friday after this news with the outage. And they still remain expensive, really, compared to their peers and compared to the overall market. So I think for all those reasons, I would stay on the sideline here. There might be an entry point to get in. I wouldn't say that's yet.